Is there a new player entering the Bitcoin market with massive funds? Well, that is the rumor. Let's take a look at what we can see in the price action of the major cryptos, including Bitcoin. And let's also take a look at some viewer picks with the help of Paul from Definity, who's been a trader for over 30 years, trading on price action and what he sees in the charts. Welcome to the Crypto Rain channel. I'm your host, Jay Rain. And if you like money in crypto and you're looking for a seasoned investor's take on the crypto market, join the Rainmaker family. Do note, I'm not a financial advisor. I'm a crypto investor myself. We do want to thank our Patreon members. We have a private Discord that our Patreon members only get access to. Now make it rain on that like button and strap in for the show. And let's welcome Paul from Definity.
It's great to be here. Definitely. Again, we say every week it's an interesting time. A little bit quiet with the Thanksgiving holiday, but still plenty to talk about and plenty to be excited about for next year.
Yeah, I mean, we've hit some incredible lows. You know, this summer we got savaged by the failures of, well, just prior to that, starting with Luna, but then rolling into Celsius and Voyager, and then some contagion issues affecting a lot of things. So, this summer we got savage, and we were all hoping that a lot of that was over, but a little bit worried that it wasn't. And sure enough, it wasn't in a very big way, as FTX totally crashed. And we found out there was a huge house of cards between them and Alameda Research. And so we're seeing the after effects of that, and a lot of the market's down, creating, like you said, a very interesting time.
Yeah, I think the sentiment is extremely important. We talked about last week how it's extremely bearish out there, and what you tend to see in major reversals is this sort of bearishness. I don't know if it could be any more bearish. It doesn't guarantee a low, but it does mean that we are potentially close to a change in trend. And if you notice, I was talking about a potential breakout to the upside in Bitcoin and being led by Ethereum, and into next week, or this week from last week, given the holiday, I just thought, well, people will probably take their eye off the ball, and then suddenly it'll go up. Now, quite how far it'll go, I don't know. Whether this is a major low or not, I'm not sure, but it's definitely trading in a way that is counter to the sentiment out there, which I'm really interested in. So broadly speaking, the more the market goes sideways, the more bullish I become, because that bearish sentiment means that it's on the onus of the bears to push the market down. If they can't push the market down, it's going to go up, and it's going to go up a long way. There's a phrase in the financial markets that's worth remembering. It's that if it's obvious, it's obviously wrong. So given how bearish it is, the obvious trade is to go short. Well, that's exactly what a lot of people would have done at these levels, and the market's gone up. And they'll be saying, yeah, well, it's, a false rally. It's going to turn around. It's going to go down. Look, that could be right. Like, nobody knows for sure. We can only deal with what's in front of us. But there has been a good risk-on rally, and certain markets have not enjoyed or joined into that rally. The biggest ones from the equity point of view has been the Asian market. So China, Hong Kong stock exchanges have been pressured to the downside, but it's rare for that to last for too long. And you can argue about the fundamentals and why that might be, but eventually things just get to a level where people step in and say, look, even with the fundamentals, this is worth a risk reward trade. And they've bought into those markets, which I thought would happen. And so that's increased the broad risk on environment we're seeing. And then what have we got left? We've got crypto left. It's really the only broader market that hasn't rallied. And I just don't know how long that's going to last for. I do think it will turn, or has potential to turn at these levels, and there's good risk reward. So, and it has to feel bad at major lows. So, and it certainly does. So we've got kind of ticking quite a few boxes here. Plus, we'd seen some breakouts in some of the altcoins. I mean, if we look, do you want me to go through the markets? I'll show you what I'm looking at.
Yeah.
Sure. Okay. Yeah. Okay. So, I mean, normally I would kind of start off with the broader markets, but I'm going to start off by looking actually at the majors, Bitcoin, Ethereum, and some of the altcoins. So this was the breakout. So we're looking at this pattern of higher lows, which is normally an indication of a descending triangle. But you get a descending triangle when the trend is going to follow the direction of the previous trend, which is this point. It should break down here. Where I was suspicious was we'd seen this in a few other coins and the market just shot up like this. Plus sentiment was really bearish. So putting the two together, the context for me was quite important. So this little breakout has potential to go further. And, again, I'm not saying this is definitely the low. I'll be very happy if it is. This could be the start of a new major trend, but it's the first step. The market is acting not in the way that the sentiment is looking. It's acting in the way that is counter, and why I use charts, because you're not going to see from the sentiment you wouldn't want to buy unless obviously you know a story like the one that you mentioned earlier. It's still got to get through this 18,600 and other levels. So there's a lot of resistance on the way up. The 200-day moving average, which is the purple line, that's major resistance, and other things. But we can cross those bridges when we come to it. So that's the first interesting element. It's rallying in a bearish market. Ethereum, again, the bullish case is it's been going sideways, hasn't broken the 2022 low. Isn't that interesting that hasn't happened, given how bearish the market supposedly is? Whilst we're over 1071, my call was that we would look for a rally, and it looks like it's starting. Now, again, it has got resistance ahead. It's actually touching one major resistance point at 64 to 80, which was the breakout of this minor low here. But if this is to become a major low, then we would see the beginning of a rally, and that to extend and develop and start to take out highs. And actually, if it does eventually take out this 2031 level, it would have made a major base. Now, you might say, well, why would I wait until it's broken that to confirm a low? Yeah, we can confirm it's potentially seen a low way before that, but that's where a major low is triggered. That's where a major double bottom is triggered, and that's when we can start talking about a move back to new highs, all-time highs. So there's a few steps there, but I think it's again very interesting that this is held above the recent low and the 2022 low. That's two very positive things in my book. Now, some of the other altcoins, if we go through them quite quickly, this Polkadot that's pretty much still in a downward trend. So that for me is on the sidelines. But if we look at Matic, that is trading much better than a lot of other coins. I mean, it made its low over here. We've always favored it because it looked technically better. Yes, it had this breakout. It's got sold off. It's come back into its range, but this is holding up much better than some of the other markets, which is again intriguing that this is holding up against what other markets are doing. You've got Ripple, which I don't know. I'm not necessarily saying the fundamentals of this are great. All I'm saying is it's in a range. It's not breaking into new lows. Broadly, sentiment is bearish, and this isn't happening. Cardano is struggling a bit still. It's still in this downward trend. A little bit of a disappointment in the way that's trading. It's trading below its medium-term and long-term moving averages. So that's still got to do a bit more work before it can turn around. But it is a mixed bag. Everything's mixed at the moment, so we would expect this. Now, even OMI is actually made a low and done a sharp reversal. So this looks like it's making a double bottom pattern as we speak. So tentatively around this 0.001 level, it says all the way along, because we've got all the digits on here, but it's at an important pivot point. If it can get above here, then it's going to start to look interesting. So that's obviously hit a level where it's made people sit up and say, right, that's cheap enough. Let's buy in. So broadly speaking, it's not all bearish. That's the main point. So if we were in a secular bear market, all those charts would look really bad. They'd all look like they were going down, and they don't. There is definitely fragmentation, and that happens when a market changes its trend from bearish to bullish. Some break out, some lag. Then the ones that are breaking out on good news tend to move much further. Then the market looks around and says, right, what hasn't moved? Okay, this one hasn't. They start getting into the ones that are lagging. And then before you know it, everything is then synchronizing in an upward trend. Now, there's obviously lots of steps to happen before we get to that more bullish situation.
Mm-hmm.
But at least step one is that it's not a broad bear market. So I see the fragmentation as positive on the side of the bull side, because as I repeated from before, it's on the onus of the bears right now to get the market lower, especially when you're seeing a rally in risk. So this is the Dow Jones industrial average. You see we had a double bottom here. We talked about it on the show. It broke out. It's gone much further than people are expecting. They're shorting it all the way up, getting caught and squeezed. And with the NASDAQ, it's not moved quite as well. It's just a very truncated rally, as we know. Tech has been under a bit of pressure, but that's still a reversal pattern, a similar one, and it still has potential to break up. So in that same vein of the market looks for what's cheap and will come back and pick up the markets that haven't moved, this could be the next phase. So look, it is a tricky market, and it is possible that the Dow could turn down and the S&P could lead the way down, but I still think the market's short. It just feels like the overhang from October was that the market was expecting a crash. CPI number did change a bit of that, but they're still not convinced. So interest rate rises are coming, but not as aggressive as that is expected. But still, I think the market is bearish and very skeptical about the upside. So given the contrary opinion and the way I like to look for the countryside, I think that there's more upside there. So I'm going to go with the risk on for now until proven wrong. I'll show you a quick chart of the VIX index. The only thing that's slight fly in the ointment here is that the VIX index has been trading in this really nice pattern where you can see when it hits a low, it tends to react and then trade pretty far up to the other swing. So it swings up between 35 and 20, and it's just got close to 20. It's now swinging back up again. So this needs to reverse quickly before we get to suggest that the if this goes up, the S&P goes down. So it moves in the inverse of S&P. So if you think about this as a fear index, the more this goes up, the more the market is scared. When the market is scared, it's falling. So we don't want this to go up. It's had a little rally, so that could fail and come back down again. We need to see it trade back below 20, or this low here, just below 19.36. So if we can get below there, then I really think the market will start to, or be on its way for a much more substantial rally into next year, which is pretty much my central case. So we shall see, but that's had a little bounce around 20. So I've got to bear that in mind and keep that as a potential bearish setup. But broadly speaking, I think everything else trumps the outlook. In other words, risk on still seems to be the favored strategy. We've got a relatively weak dollar. The dollar hasn't done much in terms of rebound. It's had a little rebound. It's holding on that line that we drew from last week. I'd like it to get below this 105 level. If it can do that, then I would be really happy about risk on. So it's having a bounce in an interesting place. So we'll see if it can get below 105. Yeah, sure, it could go all the way back up here. This could be part of a bigger head and shoulders reversal pattern. But until it gets over 108, that sort of level, if it gets up to 108 and holds over there, I'm not going to panic on it. I'm going to say that the dollar top is still potentially in. And I think in the next sort of couple of weeks, we're going to get CPI out again and an interest rate rise. So, that next CPI number, which I'm banking on being weaker again, if that happens, then risk on is really going to take off. But in between, the market will probably worry a little bit and we'll have a bit more of a consolidation. So broadly speaking, given the low volumes, people are just going to sit on the sidelines and kind of wait around. But I don't think the main bullish strategy has changed here. It's just that crypto hasn't caught up with it yet, and there is still potential. So, that's broadly what I'm seeing on the macro. I think the only final thing to say is the 10-year yields. They're still bouncing around. This is 10-year yields, 3.77%. It's below 4%. That's a big level there at 3.9%. It's not gone in either direction very strongly. I'd like to see it come back down a bit. And I think it's also worth looking at the 6 month, which is 6 month T-bills, very short-term interest rates. That's 4.5%, and it's quite sticky up there. I would have thought they would have come off again. It just hasn't. It's just been pinned to the upside. So I don't think that will move until we print a much lower CPI number. So that is a bit of a fly in the ointment with regard to the bullish strategy. That I'd like to see that coming off. But if we look along the curve, look at the 30-year. The 30-year made a really nice top, and it's consolidating, but looks like it's going to go lower. The 10-year is similar, so that's made a top. It's still consolidating, more downside. The 2-year is moving a bit more towards the 6 month in terms of it being nearer its high, but it has made a more definite type of top. So it just needs to get below 4.2%. And obviously this is pinned up here because the market's still expecting lots more, even though they're slightly reduced in magnitude, they're still expecting an increase in interest rates. And so that's why the short-term money is at this level. So they need to see a sea change in that, which I wouldn't be surprised if we see. So I wouldn't be surprised if the Fed start backing away from those interest rate rises. And well, I won't say cuts, because I think that wouldn't be necessarily correct. But if the market just gets to keep rates where they are, that is a bullish strategy.
Mm-hmm. Yeah, we'll see what happens. That announcement's supposed to be made today, right, by the Federal Reserve?
Yeah, I think they're making some form of announcement. I don't, to be honest, I follow the fundamentals peripherally.
Okay.
I try not to get drawn into it too much, because I end up then just becoming a fundamental. Yeah, because I try to see things from a technical point of view primarily, and then pick up headlines like, you know, what you've just said about the Saudis and other things. But yeah, I heard that. I think there was a strong number out today, and yeah, I think that they're maybe making some. I know the Bank of England have said they expect inflation to fall next year, which is an interesting comment. So I think they're realizing that things like food prices, metal prices, slowdown in China, all that stuff, that's going to take a few months to come into the figures. And so the figures from now are still going to be slightly weaker. But the market will be 9 months ahead and just looking for that turn up for when they drop interest rates and everything starts to go higher. So that's why I think you're also seeing a bit of a risk on buy in terms of, you know, Bitcoin and other crypto assets, because, you know, if there's going to be more money pumped into the system, it's going to go somewhere, and it's either going to go away or it's got to play catch up. So it's kind of it's either one or the other. It's a binary thing, and I don't think it's going away. So we shall see.
Yeah, Rand from Crypto Banter is the one that was talking about it, and he was talking about it today. And what's interesting about Rand's background is he worked for CNBC Africa, but then he really focused on cryptocurrency coverage before starting a YouTube channel. So he has amazing connections with what's going on the financial scenes behind the scenes. And so if he's talking about it, he probably has some really good sources that Saudi Arabia is going big on Bitcoin. And it would make sense. Clearly their relations with the U.S. are somewhat strained. What are those countries like Brazil, China, Russia, and I forget what other countries in that are trying to, get off the U.S. dollar and go to a monetary system that they can control. Obviously, China's trying to go to their digital currency that they can control. It would make sense if Saudi Arabia was going to go off the dollar. It'd make better sense that they go to a Bitcoin standard. Then really, can you trust China in going to China's central bank digital currency? I wouldn't. I wouldn't trust Russia either. And so Bitcoin, they don't have to have as much trust to, and it wouldn't surprise me if they're loading up big on Bitcoin. And if at some point they just go to price their oil in Bitcoin rather than US dollars. That might be a longer term play on the switch to Bitcoin for their oil. But that would make a lot of sense to me if they're trying to get away from the US dollar as the route to go. Now, the IMF and a lot of other things aren't going to be happy about a move like that. So we'll see how this plays out. But it would make sense, too, that Saudi Arabia is going big on Bitcoin because prices are low. And sure, they could go lower, but how much lower could they go in this cycle? And you're starting to see the articles, Bitcoin is dead. I've been through that argument so many different times, right? Every cycle near the bottom, that's exactly what everyone's saying. Bitcoin's dead and it's not going to make it. Yeah, maybe they're right this time. I'd give it like a 0.5% chance. Likely, it's a better indicator that we're just near the bottom still. So,
yeah, I mean, there's one thing that's for sure and more certain, and that is that governments are going to be printing a lot of fiat going forward. So, you know, whatever you think of Bitcoin or gold or whatever your kind of not fiat trade, whether you buy stocks or whatever, they're going to be printing a lot of everything else. I mean, you can't print Bitcoin, so the reason why it was created is still kind of as valid as it's ever been. I mean, you make a point about governments not liking it and wanting to create their own. That's definitely possible and probable, I would say, but most likely further down the line. So it's so interesting. The technology itself. I mean, with all the negative news around, it doesn't actually change the technology. All the things, Mount Gox, everything that happened before, it's still not changed the technology. It's still it's still viable, and I think that's an important point.
what would really take for Bitcoin to really be dead is that the amount of people processing the transactions or mining the transaction of the network gets really, really low because the cost of Bitcoin or the price of Bitcoin goes so low that many miners have to shut down. At that point, it would make it vulnerable to a malicious hacker who's willing to blow through billions of dollars just to crash Bitcoin. And so that's really what would kill Bitcoin. And we're very far from that. Now, the other thing that could kill Bitcoin is that somebody figures out how to hack it, essentially take over anybody's wallets and then start sending the Bitcoin to some other wallet. And that would crash the trust in Bitcoin. Now, that hasn't happened in Bitcoin's history. There was a flaw found by a hacker who then told basically the Bitcoin consortium or group of miners, major miners that mine it, about the flaw, and they fixed it before anyone else figured out about it. But so far, I mean, in 13 years now, Bitcoin hasn't been hacked like that. And so the security has been a critical part of it. So something that would really kill Bitcoin is basically a security flaw that other people can take over other people's wallets. And at that point, nobody would trust it anymore, right? So
Yeah,
that
I think they would have done that by now. I'm not saying that you never say never, but it's it's been a while, and it would have been very lucrative, still is very lucrative to have done that. And if you bet that they could have tried it, but on the other point you made with regard to the number of miners, they can make the they can make the algorithm easier to solve if there are fewer of the miners out there, to make it so that more players can come in with maybe not so sort of tailored hardware to say,
not as expensive to mine.
Yeah, so they can adjust it. So the more computing power out there, the harder they make the algorithm, the easier they make it. So they kind of adjust for that anyway, which I think is a very interesting strategy. If we ever get back to a level where you can start mining on your laptop, then people might start doing it if they thought they could. I mean, I don't think we ever will, but I think that would help with the kind of problem about whether people
viable. Yeah.
Unless
right.
energy prices are just at ridiculous levels, and that I guess that's the one problem. But yeah, I mean, like anything, the market always
Mechanisms
solves it.
that they could do to try to save it. If it's just a factor of the price going down, they can make it cheaper for miners to mine by making the algorithm easier to solve.
Exactly.
And still, you would then have lots of miners, which protects against what they call a 51% attack, as well as what those people never talk about when they say is Bitcoin is dead, is the things that cryptographical encryption combined with blockchain, some problems it solved. And at first, blockchain or distributed ledger system was a very slow way to have databases. What's nice is that it's like you can give different permissions, so anybody in the world with the right permissions can access that data very easily, and it can still be a secured network. So there were some major benefits to it, but the major drawback was how slow it is and how expensive it was. So proof of stake versus proof of work has gotten rid of a lot of the expense problem on some of the second and third generation blockchains. But then they're also a lot faster. So what we're seeing over time is blockchain improves. It can be as fast as centralized databases, but provide things that centralized databases can't do. And so it really is the way of the future. And a lot of the people that say Bitcoin are dead, there is kind of like the same people that said internet was a fad and it's just used for porn and illegal activity. And that's the same stuff they say about crypto right now, right? And it's just a way to not have to delve into it, an excuse not to have to look deeper into it, and realize that there's some upgrades to technology it brings that will create a whole wave of technological shift, from decentralized finance to improved gaming experiences where people who play games actually get to own their items. They can then sell them on a marketplace and capture the value from those items going up in value, capture the value of their account increasing in value by being able to sell that to somebody. And gamers, so just those two areas alone, it will transform things massively. In both those two areas, finance and gaming are huge economics vectors. There will be additional places that it changes to. Those are the two that'll probably change the biggest, the first. So let's take a look at some of our viewer picks.
Sure.
Jumping over to first, Drife.
Yeah. So I'm glad that we've actually had this asked. So thank you for whoever suggested we look at this, because we last looked at this when it had broken out. No, that's not the right chart, is it? That's
that one stopped updating for some reason.
Yeah. So let's go back to, let's see if this one's got it. Yeah, here we go. Yeah, this is the chart I wanted. So we last looked at it when it was doing this breakout here, and we said it might have a bit of a pullback, I think, and then potentially consolidate, which it's doing here. This is a great example of one of the coins that you would have thought, given the broader picture, would be much lower. People will sell the more risky assets that they've got when the environment is looking a bit shaky, really, and they're not selling it. So I think that's really interesting that it's managing to, it's had a big retracement, but it's still within a very decent consolidation period. So I think that whilst it's above this sort of breakout point, or this kind of the start of this breakout point, this is still, for me, the beginning of an upward trend. And when everything starts to turn higher, I would expect this to join in again, or maybe even lead the way. So I would have a buffer, and I'd say up to about 0.0007878, which is what I've got on the screen here. As long as it's above that, I'm going to stay bullish. The danger zone is if it gets back to this low here, for obvious reasons. I don't want to see it. I've just put it on a log scale so you can see that a bit better. The actual breakout came here. So that first breakout point for me is extremely important. I don't want to see it get anywhere near there. If it does, okay, let's look at the broader circumstances. Is something else going on? Are people throwing the baby out with the bathwater because they're panicking on other markets? If they're doing that, it might be an opportunity. But generally speaking, this is a impulsive move, and this is a corrective move, clearly, because you can see the way the market's going sideways. This should lead to another impulsive move. So I fully expect it to go sideways for a bit longer because that's the nature of the market right now. But I like the way this has begun its upward trend. And I think we need to give it some leeway to trade its range and then move higher. Big resistance is up here again at 0.00329. That, again, for me, if it can get through there, it will be creating a much larger base. But it's started an upward trend. We can draw. What I like to be able to do is to draw the first upward trend. Now, from here to here is too flat, so we're looking for the next line to draw here. So I'm going to put it here, but I'm going to say that this isn't actually confirmed yet. What we need is a proper rally away from it to show that next point. So we need support to come in and for it to move in an impulsive move again, to put a marker down for that retracement, to end this retracement zone. And when we do that, we can then put a trend line in, and that will be our marker for the rate of upward trend. Now, as it goes, as this develops, if it does move up, then there may be some places where it stops, gives us an opportunity to buy a bit more, or creates technical patterns that show that it's going to accelerate. So we'll have to just keep watching it for now. But I still like it from last time, and it's still a very interesting altcoin. So thanks for the reminder about it.
So in your trading thesis, you would wait till you've got a confirmed breakup further. So you would just be watching this because it went 5x from the bottom of where we've been so far. And now it's retracing, and then you're watching this pattern just to see, okay, does it continue to break up? At that point, you might find it interesting enough. You would be interested in buying it. Is that how your thoughts are running on this?
Yeah. When I look at this chart, it tells me that the market's trying to base. So it's made enough of a move to show that it's formed base one. So what I like to look for is outsized upward trends. So my thinking is this going to go all the way up here? Potentially. Or how far will it go? Now, I'm not going to predict how far a market will go because you never know. But what I want to do is I want to be on board it when it is trending. So we've seen the first wave. So that's the first trending wave that's reversing the bearishness. So it's saying, look, things have changed. Dynamics have changed. This has gone from bearish to bullish. For that to be sustained, it mustn't retrace too much of its prior move. So we'll allow it to consolidate a bit, but then like a train journey, we want to get going again. So as it breaks up, that confirms to me that this is on the move again. And then if it is on the move again, and this is a consolidation, then we should see a similar move to this one up here. So that's why I would put in a line like this, or breakout point at the top point, because that for me would be a good trigger. Now, knowing that I might not look at this for a few months, unless somebody asks about it, I also have to sort of put in an anchor point for a trend line, because that's ultimately what I want. I want an upward trend line to follow. So it takes 2 points to make a trend line and a third to confirm. So we've only got really 1 point here. And it's not that well confirmed. So we need another rally to create a solid trend line. And once we've got that, then I can manage risk a bit better, because I can say, look, as long as it's above this line, I'm bullish. So I'm bullish here because the market's moved up, and I would give it some leeway if it does correct a bit more. But I prefer to be able to draw an upward trend line as my marker for the much bigger potential trend that can follow. So I'm basically bullish, and I would hold along here, and I would hold it even if it comes a bit lower. But I'd like to see it to add to that position. I'd like to see it move higher. The higher it moves, the more bullish I become, because it's confirming the trend.
So right now, what would you rate this if you were forced to decide between buy, wait, or sell? Where would you?
I'd buy. I'd say buy.
Yeah. All right. I'm going to share my screen here, and take a look at some additional things I want the viewers to look at. One of the great things is how low the market cap is on this. Like any crypto project, Drife could fail. And Drife is like a competitor to Uber. Essentially, the tokens are used for somebody, unlike Uber, they allow local franchises. So say in a city, say Hamburg, Germany or something, somebody wanted to open a franchise, or maybe there could even be multiple franchises there. They first have to buy a certain amount of tokens, and that certain amount of tokens can change over time. But let's say that number of tokens is 50 million tokens. So they have to buy 50 million tokens and stake them in order to get a franchise. They then can open up operations and recruit drivers to drive. And those drivers pay a monthly fee and then keep 100% of what they're making. So some of that fee would go to the person that's running the franchise locally, and some of that money would go to Drive, like the headquarters. And so it's a different way of thinking about it. But the drivers then can be on different plans that allow them to drive up to so much per month. If they buy the unlimited, say they pay $500 a month, and then they can drive as much as they want and keep 100% of their fees. Well, it's a totally different model than Uber and allows drivers to make a lot more of the revenues. It also allows the riders to pay a cheaper amount per month and save money. And so it's an interesting concept. Realize when we're investing in crypto, it's like early stage venture capitalism. And even if something's a really good idea, that doesn't guarantee that it will succeed. But if it does, the token can do incredible returns over time. And just looking at where the price has been, it's been over 10 cents. In fact, I remember when it hit 20 something cents. Now, if it were to go to 20 cents again from where we are here, what is that? Is that 100 something X, or is that almost 1,000X from here? And that's just to the price it has been. One of the things we have to look at is look how cheap this token seems, right? You can get essentially 8 of them for a penny at this price. We have to factor in how many total tokens are in circulation. And we also want to look at how many tokens could end up being in circulation. And the max supply there could end up being is 3.25 billion. Okay, so that when we look at a few numbers, we look at this price times the amount in circulation. That's what gives us what this market cap is. What I like about the market cap being so low is when money comes back in the market, it frequently happens that a lot of these projects that have been building for a while, they get some traction. Their market cap sometimes go to 10 million, 100 million, even a billion or in the billions. So that gives you an idea of what kind of multiples are possible. So if the market cap went to, say, 1.5 billion, well, that is 1,000X from where we're at. And that would allow, too, that a few more of the tokens come into circulation. So, maybe we're exactly truly 1,000X from where we are now. Okay, so that potential is possible. What also could happen is the company runs out of funding in the meantime and it goes broke. And then the token goes even lower than it is now. Sometimes even companies that go broke, the token floats around out there with some kind of value in case something else picks it up. So they don't often truly go to zero. They just go really, really low. It's like next to zero. So that's a little bit of the fundamentals behind this project. This was a suggestion by one of our viewers. I followed Drife myself pretty regularly since before their launch. And it's still up in the air as to whether they'll make it. Though from here until when money comes back in the market might not be all that far away. And as long as they're still ticking, alive and ticking, when money comes back in the market, they'll likely pump tremendously.
So when you're actually paying for a ride, you still pay in dollars or whatever the currency might be, or do you pay in Drive tokens?
No, you pay in whatever the local currency is. So the riders don't really notice a difference. It's just like what they're used to, like Uber, right? Or Lyft or whatever ride share they're used to. And they just pay in the local currency. What is different is that the franchises have to buy the tokens to stake them in order to own a franchise. And that's what gives the tokens some kind of use case. So, gosh, there's no complications with people who don't know anything about crypto having to buy some crypto in order to take rides. None of that. Not even the drivers have to use the token at all because they just pay their monthly fee to the franchise. The franchise is the only one that has to have some tokens.
Yeah, interesting.
Yeah, it's an interesting model, and it's a different way of giving a cryptocurrency token a use case. So we'll see ultimately if it's successful. I own millions of this token myself. Yeah, I'm excited to see where it could go.
And they're based in India, aren't they?
Yeah.
Yeah.
And they've spread into some other countries, but mostly regional around India is my understanding. And I heard that the BBC went out and filmed with them and recorded a video, and that would have been like 6 months ago. I'm not aware that that video has yet ever aired. And I don't know what news it was that caused that pump that we were looking at. Some kind of news or something happened that, just created this big run. But because I don't speak, I mean, yes, a lot of India uses English, but there is a ton of different languages there too. And so a lot of times the news there locally is in like some other language that I don't know or understand. Yep.
Yeah.
All right, let's take a look next over at Sidus. I always call it Sidus, but the founder, Dan, who's come on and interviewed with us, always refers to it as Sidus. And this is a token for a video game that I was curious about this video game, but I became a lot more curious when I met with the founder at NFT NYC, or the CEO of the project. And he explained basically this space universe that they're creating that will allow other companies to come in and make, say, ships and weapons. And that idea has been I think that's the way of video gaming in the future, that somebody creates as an overarching metaverse or universe and kind of the mechanisms of the game, but they allow some kind of token or some type of monetization that can make it viable for what may start out as an artist or somebody that comes in and makes weapons that look really, really cool. And there's some kind of metrics that they can only, use the stats in different ways. So they can't make game-breaking weapons, but then they can market and sell those weapons within the game, and they can actually make a business within the larger metaverse game. And that's what he described to me of where they were going. So there will be companies that make ships, and there'll be companies that make different structures. And whether they'll make it long term, Dan is extremely focused, and he's got a good team, and they have a great shot at it. Whether they will or not end up making it, that's the risk we take in this early stage investment. We all wish we could go back and buy Microsoft when it was launching. The truth is, when Microsoft was launching, there were 100 different competitors doing different tech businesses, and it would have been hard to tell which one would make it and which one wouldn't, which is why I use diversification, that I invest in a lot of projects that have good potential, knowing that some of them will fail.
Right. So with regard to the technicals, so here we have the beginning of 2022, Jan. So it was ending last year, 21 into 22 on a upward trend. Can't see what happened before there, but as you can see from there, we have gone down from 19 cents to where we are now. The question is it going to turn around today now that I'm looking at it? Probably not. I don't think I'm that lucky that I just look at this today and find the low. So I have to go with the broader trend. Now I put this rectangular box in here for a reason, because that was where the market was consolidating, potentially forming a base. So that would have been the first box of interest I would have had about a potential low. And that came in with resistance up at 0.003. So a third of a cent here was where the breakout point was. Now, actually didn't break higher, as we know, and took out the low, which is a very bad technical sign, and it's still below that low point. So that low point at 0.0169 is the minimum that I need to see it recover before I could get excited about this market. I've also drawn in a downward trend line that demarcates the recent downward trend. So I could use this as an early signal that maybe the dynamics are changing and we're seeing a recovery. So a bit like Drife, it was going down, it looked like this, looked terrible, and then suddenly, boom, things change and it's broken something. That's why I try to leave triggers around that warn me that this market might be changing its trend. So we could miss something, especially with these smaller projects where a small amount of capital or a big announcement can change the fortunes completely. So at the moment, unfortunately, it's a wait at the very minimum, probably a sell. So it's between the two, really. I would have to say probably sell for now, actually, given if I'm forced to make a decision, I'd say sell. But this line is where I would return to a neutral position, and then buying it through this 0.00171 level. Around here is where I would buy some. Where I would be more excited about a broader sort of longer term recovery would be if it can take the high of this range out. And that again goes back to this resistance here. This failed resistance to me is a very good marker for where it's going to be long term. If it gets over that, then I'm going to get much more excited about the project. But for the moment, unfortunately, the trend, as you can see, the trend is down. So I'm not allowed to even be bullish on it. I'm not allowed to say anything positive about it because that's what technicals is about. So I have to let the people who really know what they're doing buy the low, and then I'll jump on it when it's looking a bit better.
Yeah, I want to share like these gaming projects. They can have phenomenal returns, and there's usually some things in their token investing in the early days that you have to watch out for. So Sidus is here, and I wanted to look at some metrics that I look at looking at the fundamentals. There's current market cap of 4 million. Okay, that's starting to get really low, but look at that versus this other number, the fully diluted market cap, which means if all the tokens were currently in circulation, we times this max supply, or actually the total supply, because they do have a burn that happens. So we times this total supply. So this number will now no longer happen because some of them have been burned. So we times this by this, and we get this fully diluted market cap. Well, so there's 3.54 billion Sidus tokens in circulation, and over time we're going to get more of these tokens in circulation. So it does put downward price pressure. I don't know what the token vesting is like on this, but a lot of games, they keep a lot of the initial tokens that are created. They keep a lot in reserves to be able to sell over time to fund the development of the game, and games are expensive to develop. And so my guess is they have a certain amount that unlocks every month that they're selling. And that's part of what's creating this downward price pressure, is that the amount of selling is exceeding the buying that is going on. And so it continues to push the price down. So when it first launched, there was a very low amount of tokens in circulation. The price pumped all the way up to 20 cents. I don't know. We might be able to find Sidus ICO price. If we're lucky, we can find some kind of initial price for their token. So their initial price was 0.2. Oh, that's probably talking about their current price. Let's look. Yeah, so their IDO price was 0.18 cents. Let's see. And their seed price was 0.1 cents. Let's see where it is. So this is still sitting just above their seed price. So their seed investors, if they're still getting some tokens released, they can be selling and not only not be in a loss, but it be at a little bit of a profit. So my guess is that what we're seeing on a lot of projects that have launched, even though they might be doing well and be doing exactly what they're supposed to be doing, the market has had so much money come out of it that a lot of times the price ends up going not just to the seed price, but even below the seed price. And that would be my guess on what's happening here. Even though I like this project and they've been doing some amazing things that I think they have a chance, a decent chance at being successful long term, I still think the price is going to go lower. So for me, it actually is a sell just because I think it's going to get cheaper. And even though I love the project, also notice another tag in here that's probably not helpful to them. Alameda Research portfolio. So Alameda Research has some of their tokens too, and who knows what will happen with those tokens. So I do like the team, and I like Dan, the CEO, a lot. But we're just looking at what things are likely to happen, and my guess is the project is going to go a lot cheaper. At that point, I'll be revisiting it to see if I buy. All right, let's take a look over. Our next one is Render, which this will be a good one to look at.
Good so
by one of our viewers.
Yeah, sure. So while you were chatting, I just was doing a bit of analysis on it. And first off, we're in a relatively broadly neutral position, and I'll explain why. If we take the upward trend from June 2020, so we've got a gradual upward trend line that I can draw in here. Now, because this line, this low, I don't know whether there's another low that comes back or whether that was the beginning. I'm tentative about drawing it from that point, but I don't think it affects the chart too much, even if we adjust it slightly, because it's holding in this support, this support, this support, and the current support. So it's respecting this line that sort of goes off into the distance on the left of the chart. So I like this line. So that's a good thing that that's holding up. It did attempt to break higher at this point here, which would have created a classic double bottom formation. So this would have been base 1, this is base 2, and this would have been the buy level at 82 cents. But we can see what happened next. It went through that, which would have been the buy signal, and it would have been negated very, very quickly afterwards. The rule is that when you buy on a breakout like that, it's got to hold above the breakout point. You give it a little bit of room because market's volatile, but you can't hold it all the way back down again. That's a failed breakout. So this trend line that it also broke out at the same time, which would have been, I would have been excited about it for sure on that breakout. It's failed, and that happens. From the way I look at markets, when they fail, you get out and then live to trade another day and wait for the opportunity to come in again where it looks good again. And who knows, next time it might go all the way back up to $10. But for the moment, it's still stuck in this kind of range here, and it's very neutral. So I'm going to have to wait until we see either a break downwards of this support line, which is fairly close to, it's a little bit close for comfort. I'd like to see it move away from that. Break of that support line would not be a good sign. But more likely it's going to go sideways. And then eventually, if we take out this new downward trend line, so this dotted line was the first one with the most points, because we've got 0.1, 2, and then 3. So that was the most important trend line, downward trend line, until it got breached. Now I've left it in as a dotted line to show that it's no longer the most valid trend line. This is the next one. So if we just adjust that slightly, because it's not right at the top, getting a little bit OCD about where that is. So that's right at the top there to here. So now as a trigger, we can use this point again. That would be a good initial breakout point. But as you probably guessed, the next most important level, or now the key level, is this high. So if it can get through this $1.10 level, that tells us that this is all the bearishness has been negated. But we would know that it's done that along the way, because it would have to break this downward trend line before it gets there. So that's why I use that as a tripwire for the bullish strategy. A clue would be breaking 81 cents and obviously breaking this downward trend line as well. But whilst it's in this range, for the moment, it's still a little too neutral for me. But I have to say, if we take a step back and then look at the broader market, again, I would say that given the sentiment, it seems to be holding up very well. So it's not like the previous chart in a sharp downward trend, and it seems to have made a low sort of ahead of some of the other markets, and it's managing to hold above that low in recent price action. So given the broader bearish sentiment, I like the fact that it can even hold in a sideways range. So one to keep an eye on, because it might be a leader on the breakout when everything else turns.
This project's an interesting one. So it did pretty well during the spring pump of 2021, and it took it all the way to, where's that? About $2.50.
Yeah.
And then it started retracing into that summer like everything else did. But when the metaverse pump came, it took off tremendously. So that announcement came sometime in October last year, where Facebook was announcing that they were changing their name to Meta and that metaverses were the new big thing. And just about everything in the crypto space related to metaverses totally took off. Render absolutely going up crazy. If I change from a log to just like a regular chart, you would see it was way down here at, trading around 90 cents to $1, and jumped all the way up to $8. So it went almost 8x. And then it's retraced all the way back down to about 50 cents. And so that would put the current market cap at 120 million, which is in the realm of like what seems to make sense. And what Render does as a technology is it's creates a way or a system that will allow other people like gamers who have high-end gaming machines to put their machines to work rendering the metaverse stuff or the video games for other people and be able to draw some rewards for that. And so essentially people can use their gaming machines to essentially render for other people who want to play the game, who might pay a monthly service fee. So say somebody that just has a basic laptop, but they want to play high-end games, they can buy a cloud service right now where they can use the cloud service that has a bunch of high-end gaming machines or some other type of graphical processing units in some computers that essentially is processing all the data for them so they can play a high-end game on a low-end machine. So this is kind of a decentralized way of creating a competitor to that, so that just it almost creates kind of like an Uber versus a taxi system. And so the hope is that by going to an Uber type mechanism where people can just put their gaming computers at use while they're at work, can make some money doing that there's some value added, that people will pay less than they're paying to the centralized services and still get the same quality or better of what they're getting. And so that's the premise that Render is running on. And so that's one of the things that blockchain technology allows, right? Is this decentralized type system where you can take the kind of Uber model and you can take it into cloud computing, where other people can put their computers to use and make a little bit of money that would make it worth their while in order to do that. So we'll see if it makes it long term. But right now, half their tokens are in circulation. So the current circulating supply is 253 million tokens out of 536 max supply tokens. So, or maybe that's only 530 million max supply. Maybe they have some kind of burning mechanism. So about 47% of their tokens are currently in circulation. So there is still 50% left that could be put into the ecosystem that could decrease the price, but that's a lot better than a very low number being in circulation. And so only half are left that can dilute the value over time. Yeah, it looks like it's getting ready to run. For me, I do like where it's at. If I were going to buy Render, and I'm not, because though a lot of people think this market cap is really low, it's not risky enough for me. The market cap's pretty high at 120 million. So it's just outside of my threshold. If I were looking to go more, this is almost at the blue chip level, then I would be buying, and it would be a buy for me if it fit what I was interested in. I'm taking a lot of those riskier bets where they have a higher chance of failing than, say, Render does, but they also have a much higher chance of going 100 or 200x over what Render does. Because Render going 100x from here would take it to $47, right? And so that's a long ways from the high. Whereas some of the ones we talked about, like Drife, which I hold a bunch of, for it to go 100x from here would only take its market cap to, Coin Market Cap showed a lot better than CoinGecko. DRF would only take its market cap to 130 million, which is essentially where Render was, almost where Render is already, right? So,
but with regards to the technology, the rendering, is it just for the game, or can you use it for other things?
You could use it for 3D model rendering and other things. Because, like, so say somebody builds in 3D Studio Max or Maya or something, and they need to render it. So say an artist is using Maya, but the rendering takes a long time. They could use something like that to render it for them, right? So,
yeah, or scientific models or something like that.
Yeah,
so
exactly.
Yeah, it sounds pretty cool, I have to say.
Yeah, it's kind of like going to an Uber type model over like the existing taxi system. For a while, the taxi system worked really good because there wasn't the technology to enable more of a decentralized model that part-time people or people that want to work part-time or full-time can just put their car to use. And there's an app that can line up everything. So now essentially it's the same thing. People have their computers, they can use an app or a program on their computer that can allow them to connect up their resources to be able to be used to process, and in return they earn a certain amount per hour that they put it to use, right?
Cool.
All right, let's take a look at Ecomi, and I added this one to the list, and I know a bunch of the viewers follow this, but I've been watching this one really excited to see where it's going, and it got really cheap, and I wasn't able to buy that full bottom. I just like this one enough that, man, I bought it. I missed when it wicked down to the very, very low, and as it was coming back up, I bought some at about 0.78, I think is where I caught it. 0.78 or 0.078 cents. So
okay, yeah. So just a bit of history on the chart here. So we've got we had the downward trend, the consolidation. So it looked like, okay, we formed a base here and it tried to break up, and then that failed. We went into the neutral zone. Then we got this really nice move up here again, which was exciting because when a base fails at one point, it can then turn into an even bigger base, which it looked like it was doing here. It got through the moving averages, the shorter and the longer term moving average, the 60-day and the 200-day moving averages. And so it was looking very, very good at this point that it was in a major base and we were off to the races, but it had to break this level here, 0.00197. But that's exactly where it failed. So the resistance from before, or it's close to enough, near as damn it, is where it failed, which is obviously a big shame. But the move down was actually pretty swift and quite worryingly fast. So the rate that it went down took out the previous support, which it was a warning sign, then went into all-time lows or lows on this chart. And again, technically, that's a very negative sign. So when that happens, from a technical point of view, you have to wait for the market to stabilize and form some form of base. So we need a base trigger. We need some margin of support below us before we can build a base and then buy into that and use that base as our kind of cushion if the market comes back down again. So what we've seen here is a very sharp reevaluation of the potential and then a consolidation. And as first steps go, and clearly we've got to take this one step at a time because it has been under a tremendous amount of pressure, and it's also extremely volatile, and it's an extremely small, relatively small market that could get blown around. But all those caveats aside, I think now it's looking interesting enough for a punt on the upside. And this is at actually a very important support stroke resistance level. So this support, this buying point, has come right back up to being resistance, support and resistance reversing its roles. So if we can get through this point here, I think there'll be a bit more upside and get drawn into this, back to this area here. So taking it one step at a time and looking at it from a short-term perspective, I would say that this is a buy. Now, obviously, it could fail, and if it fails, it'll fail quickly. And so I wouldn't put, I wouldn't allow it to go into all-time lows before I get out. I would get out, around here. So this, for me, would be the watershed line. If it gets below here, then I'd have to exit. I wouldn't like it if it got below this point here, 0.000836, because I want it to consolidate and then squeeze higher. So I'd like it to stay either in this range or push up, and for it to do it quickly. So we're looking very, very short term here. Whether it's recovered from a long-term perspective, it's got more work to do. We need to take out this resistance at 0.00104. That takes us back into a recovery from its major low. And then we can start looking at how it's looking technically, whether it's done it quickly, whether it's consolidating, and do further analysis. But if we were looking at it a few days before, like here, I would have said, no, you can't touch it. I wouldn't have been able to touch it from a technical point of view. But it is making enough of a reversal pattern for it to warrant a short-term trade. And yeah, we put that in a high-risk strategy, but could be worth a go.
Yeah, so, I want to share a little bit of fundamentals on this price drop. This price drop coincides with the whole rest of the market dropping because of the FTX news, right? And the worries about what further contagion that would cause. And so we saw in after the first week of November, if I'm remembering the dates right, or just after that, is when that whole crash happened. And then what I heard behind the scenes, because I have some good connections in this ecosystem, the Comi ecosystem, and their app Vivi, and I'm in this group of OMI whales that I own millions and millions of the OMI token, and a lot of the people in that group own at least 100. Some own 50 million, some own 100 million. There's one guy in the group that is like 100 millionaire, right? So not quite to a billion is my understanding in his life, but he has tens of millions of dollars in this app and in the token. And but even though that sounds like a lot, there was a guy that was initially one of the creators of the tokenomics behind this token that had billions of tokens, and the founders had a falling out with him. My understanding is they just didn't trust him, or they didn't like something about him, and so he got cut from the team, and he was quite bitter about that. And so he's done some things to try to hurt the project, is just what the rumor is. I don't know the guy. I haven't confirmed this. But the rumor behind the scenes is that he had a lot of money tied up into FTX. And so when FTX was crashing, he couldn't withdraw any of it. He had to free up some liquidity that he had. And he had billions of tokens. And so he was, according to the rumor, selling a bunch of those tokens to get some liquidity. And that's what caused the price to crash to record levels. I mean, it was seismic because there were a lot of buy orders in it right at that 0.1 cent area. And that got crashed through, dropping it all the way down to 0.075 cents, which is quite cheap. But we were just talking about market cap, so let's bring some market cap analysis into this. Now, I just said that I wouldn't buy Render, and yet this market cap is twice as high as Render's. And so this is technically a blue chip by my categorization for where the general market caps are now. Yet why do I hold so much of this? Well, it's because I believe in where this is going. They have partnerships with Disney on their app, which Disney owns Marvel. So you see a bunch of Marvel comics that they're releasing digital versions of all these comics characters. You can see Star Wars and She-Hulk and Dr. Octopus. They have all these partnerships to release essentially first appearances of all this major intellectual property. And so I think it's bringing a lot of people into the digital collecting space, and they're really pioneering this, or the leader in this. And that's why I'm such a big fan of this one. So even though their market cap is twice as high as Render's, I own a lot of this because I think, where could this go? And could this go 100x from here? And I think it could. I think it could even do better than that, by being a leader in a space that I think is going to go much, much bigger over time. Not just the comics increasing in value, comics and some of these collectibles, but also their token. So they're finally giving their token a use case, which is exciting. So we're getting to this. Actually doesn't show the history very well. The better chart is the one we were sharing of yours. And even this doesn't show like the full history of when it was down during the bear market to a price far below these numbers. Well,
so it has been much lower than this before.
Yeah,
That's
during the
interesting.
last bear market, they technically launched their ICO in 2018, or I don't know if it was even an ICO. They did a pre-sale, and I was able to buy some then. And then they did a token launch, I think, on a centralized exchange later. And so the market's been available out there since mid or late 2018. And during the last bear market, it went really, really cheap. And the people that bought it during the last bear market, when it went all the way to that 1.4 cents that we were looking at the high, it right at the top there, it went to 1.4 cents. It went like 1,000x from the bottom up to that price. So now it's retraced considerably from that point down to its current price. What would that even be? 1.4 cents down to it's currently sitting at 0.09. So it's come down about 95% to hit here. But the project itself is more solid than ever. They're making revenues. I don't see any reason they'd be going out of business. They are releasing collectibles, and they make money from releasing collectibles, as well as secondary market fees every time these collectibles trade hands. And the amount of trading that goes on these collectibles is incredible. And so, like, this is the market, and you can look at, some of these things are very cheap, but the amount of trading that happens behind the scenes is a lot. So the common level of this Thor is 440. The secret rare is at $98, and they take a fee of like 2 to 2.5% every time one of these trades hands. And then Marvel gets 6%. So there's an 8 to 8.5% fee every time one of these trades. And so Marvel's making good money as these things are on the market and trade hands. And so is Vivi as a marketplace. And so I think their business has a higher than normal chance to succeed for the crypto space, and has good potential upside. So yeah, the price has hit these levels, and that's not to say it can't go cheaper. Obviously, for me, it's a buy at the prices that it has been, like, because I just bought some. I managed to get it cheaper than what it's at presently. But yeah, I just bought some more myself, and I already have a lot of this. But I'm really bullish on the future of this one. And that's why, my portfolio, this is one of my larger holdings. And Paul, for you, if you were forced to make a decision, I think you said you would take a risk and buy a little bit now.
Yeah, I think from a short-term perspective, I would jump in and just nibble a bit. Long-term, as I was saying, I think it needs to confirm a bigger base. But compared to where it was before that rally, that technically I couldn't buy. But this is showing some strength, and therefore short-term trade. Yeah, I mean, when you talk about it, you make it sound also extremely very interesting. So it could be one that you just stick in the bottom drawer and just forget about it. And put some money that you can afford. Obviously, it should be money you can afford to lose if you're trading with it in this way. But it seems like a fairly, decent risk potential against reward. And if big names like Disney are involved, then at some point, if they're under a cloud for other circumstances, yeah, the upside looks interesting. But technically, it is showing some signs of strength. So that's the first step for me. And so
yeah, if we could all go back 50 years ago and just buy a bunch of comic books and throw them under into a safe so they didn't collect damage or anything, would we do it? I would. Some comic books, some baseball cards. They're releasing essentially digital comics of Marvel. DC is doing their own thing for digital comic books, so it won't probably be released through this platform, but they have Marvel, which has some of the top comic books as well as the digital collectibles, and they're making a digital metaverse that you can put all these collectibles in and share them. And I think of the power of social flexes. Like, why did a project with some JPEG images called Bored Ape Yacht Club do so well last year? And it's because the power of digital flexes is pretty huge, right? Why do people pay hundreds of millions of dollars for a piece of artwork that they look at maybe once every year or two, if then? Well, it's because of the social flex behind it, right? So perhaps these is a social flex, and these collectibles being the first appearances of some of the major brands and names out there like Spider-Man, Batman, Thor, a lot of these things in the new Marvel Universe movies that have brought to mind all these great brands like Thor and Spider-Man. Well, they, perhaps those will become gigantic social flexes in the future. And if they do, then the value on some of those will go absolutely high, and likely the value of the token behind the project and some of the collectibles themselves. So that's my bet. It's always a risk that maybe, Disney and VV, they part ways and Disney does their own things, and, VV becomes a relic of the past. That could always happen. And so that's why the risks associated with it, just like if you went back to 1952 and you bought a bunch of Mickey Mantle rookie baseball cards, you have no guarantee that, he was a rookie. How'd you know Mickey Mantle was going to be a great player? You didn't, right? A lot of kids put those in their bicycle spokes and rode around and, didn't keep or hang on to any of that because they're like, the value was just so cheap at the time. So this combines a little bit of investing with a little bit of our inner nerd side on these collectibles and these brands that we like. And we'll see if that amounts to something substantial in the coming years. Cool, Paul. Well, thank you for joining us, and thank you for your insights.
Always a pleasure. Thank you.
All right. Well, yeah, the market's down right now, and perhaps we're at the bottom. Perhaps there's more pain to go. But what I would ask you to look at and feel is, doesn't it feel absolutely terrible to be in the crypto space right now? Because we've all bought and the prices are down even lower. And that's exactly what happened to me the last crypto winter too. And it's frustrating because you think I could have way more had I bought it just the right prices. And that's part of trying to buy at or near the bottom, is you don't know where the bottom is. And it oftentimes goes even lower than you think it will. Well, I can tell you that last crypto winter, even though that exact same thing happened to me then, that when money did come back in the market, it took my portfolio from the very bottom of what things went to 100x from that point, which was an exciting ride up. And we didn't even have a massive bull market last time. It was just a decent bull market, but not a massive one. So imagine if things went from exactly where prices are today, generally across your portfolio, 100x up from here. Would that make life-changing gains for you? There are some people that are totally leaving the space. I get some negative comments and they're like, oh, you've been wrong on so many things. Well, have I? I talk about projects and I talk about what seems like good prices to get, but sometimes prices go lower. And that's really what he's talking about, is prices have gone even lower than then. But have I been wrong? Well, was I right to buy Cardano at 7 cents in the last bear market, only to then see Cardano go to 5 cents, which, trust me, it was frustrating. In fact, I think my first buy on Cardano might have been a little bit at 11 cents and then some at 9 and then at 7. Bought some more at 5. And then I think my lowest entry was at 3. And when it was at 3, it was extremely frustrating that I'd put any money in at 11 cents and any money in at 9 cents, all the way down to 3 cents. But was that a bad buy? Was I wrong on Cardano? No, I wasn't wrong on Cardano. I just didn't have a magic crystal ball to see where the bottom is. And I still don't have a magic crystal ball to know exactly where the bottom is. And if that's what you're expecting, well, just expect to get disappointed, because I can't offer that. I'm not, I can't see the future. What I am is an investor, and I take strategic guesses, and I tend to bet on projects that I think have something special about the project, that I like the team behind it, and that they have a decent chance of doing really, really, really well. And some of those projects will fail. Why? Because that's just the odds, especially because I usually invest in ones whose market caps right now are somewhere between 200,000 to 5 million or 10 million, with Ecomi being a rare exception and Cardano being a rare exception, where their market caps are much, much higher. And I know that some will fail and some will absolutely go crazy, maybe 100x, 500x, 1000x. I mean, a few of my placements in the last bear market went, one of them from where I bought to its top was about a 3000x ride up. So just know that that's why I take the risky ones I do, is because some of them have the chances to go exceptionally high, and that makes up for some of the ones that will fail along the way. Right, everyone, thank you for joining us. This wrap is for all of you, and it's really just to reinforce the principles of long-term investing and how to think about it so that you don't get wrecked, wiped out, and leave this space. Thanks so much for joining us. We'll see you all next time.
To the space, chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit bad before you could. Was taught to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I stick the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. The principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, go parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. I'm strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. This game plan is mine, I'll own it now. now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck.